Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. Oh, the camera is not working, so we're just not going to do it. Not for now. Anyways, let me check here really quick. It's still loading data. Okay, so it is a Friday. Gotta be careful. Fridays always screw me over, but we do have some big numbers we got. Well, not necessarily big numbers, but core retail sales, import prices at 6:30. So we got that coming. And I'm still sick. I'm sorry for that. Good grief. My ZB chart is all jacked up. It's not reading volume correctly. Oh, that's so messed up. I hate that. Okay. Well, maybe on the daily time frame, or sorry, on the 30-minute time frame. Yes, it is. Okay, so yesterday we had pretty bad news. I mean, well, the inflation data was low, and the PPI data was low, so you would think we'd move up, and we did move up, but we ran like right into the resistance, and now we're lower. You can probably see even stronger in the 10-year, so we're continuing to flatten in the spread. Very interesting. Here, 5 and 10, flattening a little bit as well. I think that we're going to have to come up. Why is this? Did I misclick? Time in. So I misclicked and it filled me 2 hours ago. That's interesting. Well, I do kind of want to buy it there, so we'll see what happens. I want to see them come off of the lows. It's pretty thin so far. Let's pop in here. Okay, links. I'm sorry I'm making all these weird noises. All right. This is more correct. Bitcoin looks like it's coming off already of that 65. It could do it really hard too. Okay, now let's come back over here and fix. There we go. Hi. Okay, well, they hit into 075. Good deal. Okay. This is going to kind of be interesting. Okay, well, they sold 301. We need to open up the squawk too. Okay. Oh, come on. Okay.
3 minutes now until we get US retail sales for August. That's 0.4% expected again. Prior of 0.5%. Next August month, 0.5% expected. Fixed gas and autos, it's a power of 0.6% with retail control 0.5% expected. Also getting the US import prices for August, that's month to month at minus 0.5%.
Yeah, is it just me, or is this selling going into the news like exactly what happened yesterday?
Yeah, I was gonna say it does feel a lot like it did yesterday.
I don't know if I'm just gonna buy it. That might be exactly what they want us to do. I'm just really shocked that there's that many orders willing to play into the news.
Right, usually it's stagnant for news like this. And that we actually just saw volume spike there. We're net buying since 725.
Well, what are we looking for? It's 0.5 for core and 0.4.
1 minute.
And 78. No. Negative 0.2 for import prices, which is important. Import prices is important, okay? Incredible job being done by FEMA first responders and law enforcement. Thank you. Donald Trump tweeting.
10 seconds.
And FEMA has a rumor control page. He's been retweeting a bunch of FEMA and Red Cross and Hurricane Center stuff. It's interesting.
0.1% month-to-month. Ex autos 0.3% month-to-month. Import price
Lower
month-to-month
than expected, miss.
6% with export price minus 0.1%.
Well, I could buy into that, but I'm not.
Month-to-month coming in at 0.1%. Below expected 0.4 with the ex autos at 0.3%. Again below expected 0.5%. And power price as well with 0.7% on the month-on-month. Ex autos month-to-month. Well, power rise to 0.9%. The ex gas and autos came in at 0.2% with a power rise to 0.9%. Retail control 0.1%. Power rise to 0.8%.
Import prices was down
coming in at minus 0.6%.
0.2.
And the export price month-on-month 0.1% below the expected flat reading.
Okay.
So
that's not a...
US retail gasoline sales were up 1.7%. Cars and parts sales were down at 0.8%.
So I'm having trouble here at 0.85. Problem is, I don't know if you're going to get... I don't think I could buy 0.85, but I don't know if you can get any lower. So if this goes higher, I might have to do it without us. Getting the silver in the 5-year too, so this is not a spot I want to mess with.
With equity finance filed for debt shelf guarantee. That is not disclosed. From Germany, Merkel saying the German coalition is not going to collapse because
like the buyer isn't super enthusiastic.
They ran right into a wall there. Good morning, guys, on YouTube. You guys can hear me okay, right? I changed the microphone a little bit because the room is not... I don't know if you can see behind me, like there used to be a computer back there. I got rid of it. It's over there now. And so there's more room echo, and so I turned the volume down a little bit to try and reduce the room echo. So it's a little softer. But I'm going to get some treatment and just put it along that wall there to deaden that. It won't completely solve everything because I also need some stuff up here. But I think it should make a big difference. Right? They're gonna bust through 0.65. I mean, they came back there awfully fast. Hmm. Now there's that target all the way down at 02. So their initial reaction on the news was was in line with the news. They ran into a wall. They liquidated, and that ended up pushing us lower. We're kind of in unknown territory now. Have to come back to this yearly chart. I see like 118 below us. So yeah. The whole thing to me seems okay. Well, that move down was a bit of an outlier on the sell. I'm not gonna buy 06 half, but this whole thing looks kind of suspicious to me. Like they're gonna turn around here. Maybe if there's an iceberg there.
Block buy.
Nope. Block buy instead, huh? Even if it was in the right spot, like if that block buy happened down here, I'm not sure I'd be taking that.
Block buy.
What?
Wow, did you see that?
Okay, that was crazy.
Behind the 7 was legit.
Well, it was 3,000 the first time and 3,000 the second time, and the 1,000 followed it, but they haven't busted it.
15K and all now.
Okay, that buy there, and they didn't get through. And they're still fighting it out there too.
Right against session strength again. So the 12 handle now. Just in European debt supply news, just looking forward to next week. We've got busy bond supply with 5 sovereigns set to sell debt. Belgium scheduled to hold a bond auction on Monday, selling 4 bonds of various maturities. 2057. On Tuesday, Germany selling 4 billion euros of 2-year government bonds, holding a 3 billion euro auction of 10-year bonds on Wednesday. And on Thursday, Spain and France holding auction.
Averaging 20,000 contracts per 5-minute interval over the last 30 minutes.
25 and 28, with the amount it wishes to raise on Monday. And France planning to sell 6.5 to 7.5 billion euros of bonds, as well as 1.1 to 1.5 billion euros of inflation-linked goods.
So my squawk was just pointing out there that the yen is getting hit pretty hard right now. And there's also a lot of bond auctions next week, not US, but in all the European countries. So that I think would be a good explanation for why we've been moving down, is that dollar strength.
Comments from Fed's Kaplan now, but still expecting 3% growth in 2018, fading a bit in 20.
See this big order in the 5-year? Where's my pen? It was right there. A little bit of it pulled. You also should remember that this is down here, just in case this doesn't do what we want. Okay, so they were able to bust through it, and it didn't take that much, and they actually absorbed quite a bit on the bid. But this is not going. This is bad action.
Any more comments? Expecting to hear from Fed's Kaplan at the top of the hour. Remember, consider it a centrist. In comments saying better fun.
I don't think that this kind of action is necessarily the most conducive to scalping, because even though it looks like there's some big trades being made here and maybe somebody's going to lose and we're going to move, you know, that last little bit of action, the 5-year ticked up through a pretty big order, and at the same time the 10-year was ticking down, and they're not lined up at all, so you're going to get like that spread dominant action and a lot of absorption on both sides and stuff.
Yeah, it's really misleading. It's more of a coin flip.
Yeah, and what I'm worried we might see is when it starts to get going, you go, oh, okay, somebody's losing, and then it's going to stop right there. Thank you. Okay. So see, the 5-year took it. The 10-year is struggling. The 30-year is still down several ticks. I don't know what the deal is with my 5-year data. It did not load on the daily time frame correctly. I don't know if that's Rhythmic or NinjaTrader or what, but... Yeah. So, you know, I really want this to tick up, but I kind of really want out of this trade. So I'm going to see what it does here on the uptick. Yeah. Okay. Because there's so much thickness in here, you know, it may continue to go up, but this is not our kind of action at all. See, when we were down here, that was a good trade that I missed. I mean, it was kind of on a stop run, so. Yes. Hmm.
minutes now until we expect to hear from Fed's Evans, who will be speaking on current economic conditions and monetary policy before an event hosted by the Sweetwater Line Company, Fort Wayne.
Well, I'm not. I mean, you could buy that one. It's 6. There is an iceberg on it, at least. Yeah, see that size at 05? Somebody's betting on it making a new low. Is how we read that. You got that one, and you got that one right there. Right? And that one. Those guys on the upside aren't giving up either, though, so it could range in here. You could get a range. You could buy here and sell here.
Seconds. US economy firing on all cylinders, 3% to 3.5% Fed funds rate projected for 2019-2020. Mildly restrictive policy stance in 2019-2020 is normal, given unemployment forecast. Mildly restrictive policy is consistent with some moderation in growth, gradual rise in unemployment. Expecting inflation to edge up a bit above 2% goal, 3% GDP growth this year, some slowing in 2019 and 2020. Expecting unemployment to fall to 3.5% by the end of 2020.
As Dove Evans says, U.S. economy firing on all cylinders.
Fed Evans saying the U.S. economy is firing all cylinders. Mildly restrictive policy stance in 2019 and 20 is normal given unemployment forecast. Expecting inflation to edge up a bit above the 2% goal.
So I'm not quite sure why what he just said would be
News now.
bullish.
Governor, difficult for US to cut a range zero. Spare oil production capacity anyway.
And definitely some buyers holding it here. What is going to happen to wage inflation after the hurricane? Whoa. I'm a little, even though I saw a potential buy at 06, I mean, it even went bid and it looked like they were absorbing a decent amount on the bid, and even here it seems like they can go up, right? But this big order down here at 5 says, hold on. If you buy it there, there's potentially 3 ticks of risk there. I'm not sure I want to take that 3 ticks extra risk in action that so far we've all seemed to feel as crappy, you know? Not to mention that the trend has been down. Would make much more sense to come down, have a 1 tick new low failure, and take it there. Know what I mean? Oh, there, the 5-year tick down. There's the 10 trying to tick down. So what can I say? What can I say here?
Expected. 0.1. Capacity utilization seasonally adjusted percent against par of 78.1. Manufacturing output month to month 0.3% expected prior. Note now from manufacturing sector. There's been increased signs of slowing external growth. Supportive expansion. Since this backdrop, expecting a steady point manufacturing output. Moreover, based on industry forecasts, auto assemblies up sharply in July.
Hmm. Well, we do still have, we have news in 15 minutes, and then we have news at the top of the hour. That was gross, I'm sorry.
The bund is so low. It ticked down and actually made a new low. But the ultra bond and the 30-year it's a little bit light.
I don't see Bob yet, but there certainly is some volume going through today, isn't there? The thing is, there was a lot of buying up and through here, and now we're just a little bit lower. So there was. I guess maybe you were talking about this. Oh yeah, 23 was a while ago, huh? Okay. See, they got through that. I don't know. It's a little bit too comfortable down here, isn't it?
Absorbed 1500 now into 22.
I got burned on that move towards the low earlier. It looked like it was going in a retrace. Didn't see this action coming. Yeah. Well, it was really off that first news was when I started to be like, it's not acting right.
Just an FX, we're seeing dollar strength again.
And this is the other thing is that FGBL is low and the yen is just moving. Okay, well, that kind of made everything go a little wonky, didn't it? But this is exactly where I'm like, oh, I want to buy this, and I don't think that's a good idea. I think that this is more games.
Minutes now to get US industrial production for August. It's again 0.3% month-on-month expected. Capacity utilization 78.2% expected, with manufacturing output month-to-month for 0.3.
So see, it continues to. Okay, here's a spot. 4,000 absorbed on the bid. We did move up a little bit. Maybe we can go through here. And what does it do? It goes through it.
One minute. Seconds. With 4% industrial production, with capacity utilization at 78.1%, manufacturing at 0.2%, was U.S. industrial production coming in at 0.4%.
Industrial production is better than expected.
0.3, power revised to 0.4%, capacity utilization at 78.1%, power revised to 77.9, manufacturing output coming in at 0.2%, just slightly below expected 0.3. Looking at the breakdown as well, it was the August mining output was up 0.7%, unchanged from the prior. Utilities output was up 1.2% from prior 0.1. Industrial output ex cars and parts was up 0.2%. Motor vehicle assembly rate 11.54 million here from prior 6 million.
Back down to averaging 12,000 contracts per 5 minute last 30 minutes.
So they're having a hard time getting above the 065.
NAFTA news now, the Foreign Minister of Canada, Freeland, is planning NAFTA talks until at least Monday. Just again, that's a Canadian Foreign Minister Freeland is planning NAFTA talks until
Okay. Did that move down? No, it didn't move down.
Speaking of Moody's, the outlook for global mining and marketing sector changed positive.
Yeah, this is kind of interesting because for a moment there I really thought it looked like it was going to go up, and I said, no, that's exactly how they catch me. And sure enough, now we're down at the low.
A bit of commodity.
So this 202 thing does kind of look a little convincing, right? Like, they got two relatively big orders down here, and they've hit into it a few times now, and it hasn't gone through it. Oh, I see Take was there in Twitch, and then he came into Discord. Oh, I'm glad that happened. How come on my channel it doesn't show me? I have to fix some things because it's not quite right. It needs to have the link there.
Block cell.
Aha.
There's a stop run.
I don't know if it was a stop run, but with block sell there for sure.
Yeah, well, yeah, especially in the 5-year. 20 and a quarter.
Man, they sold through 10K there.
Political nuclear probe filing new Manafort charges, suggesting a guilty plea from a Trump lawyer, Manafort.
I really wish I understood what it was I was seeing earlier that made me think that buying it up there was really fishy. Because that was a pretty good read. So it was just seeing the big bid down there, and it was one tick further away than it should be. I don't know. Now the 5-year is showing size above us, and the 10-year is showing it as well. Okay. So that on that tick up there, put up some serious size. At this point, I'm not selling 055. No one's willing to sell 055. Let's see what happens in 6 minutes. But I'm biased long from here. Okay. Well, they didn't take a trade there, but they did sell through 055, didn't they? This spot right here at 050 looks like a potentially better spot to go long. But because you continue to have size 2 ticks below, and you have a size at 02, I'm still really wary about buying anything. I think what I'm going to do is I'm going to wait and see if they try and make a pushback to 06, and if it sell it here. I think this order might pull. Yeah, I mean, it hasn't been there for very long, but this one might not. Yeah. Okay, so 3,000. So it said 6 and it took 4 to trade up through it, but then it traded back down. So they're going to haggle around here, but I think we could see a few more ticks up.
Long-term interest rates makes it hard to interpret implications of flattening curve. We'll hear from Evan saying the flattening of the yield curve might suggest heightened risk, but all other indicators are very strong. More from Evans again saying it's premature to put too much weight on the shape of the yield curve.
Oh, you know what? I don't think he has it. Shh, don't tell anyone. This is stacking a little bit. No, I mean that buy at 055 looks good with that iceberg there, but I'm a bit skeptical. Especially with you just getting all that selling there. Really only at 202, right? Yeah, it was 202. I mean, above here, I want to be long. interesting. Evans 007 licensed to kill balls. And this you're getting an interesting setup here because we're right at where that big selling came into the 5-year, and there's a iceberg on the bid now at 202. So if we are able to get another tick up or so, you've got about 12,000 contracts short in the 5-year that are trapped. I mean, that's not... It's okay. But if you want them to get well past that 202 level, you would want to see them really hitting up in there, right? One thing that I'm noticing is that when we tick back up above 050, some orders show up again. So we had, like that run through there, but now we're coming up above it and they're putting the size there again. So that sets up a good potential setup to hold it. Oh, okay, now we're getting some iceberging there. Okay, so we are getting some help. We'd have to see some buying come into the 5-year. Have to see it tick up. The way that the size is right here is not moving out of the way. That's not helpful. You might get the 30-year to buy here, and then maybe some of these could pull. It'd be better if you had been in at 050 for sure. Okay, so that is definitely stacking into the selling. Okay. Alright, so now some of it pulled. And the 30-year did tick up. There was a big iceberg there, but they did tick up. We get careful because it's like it. Oh, well, there's 6.5 and there's 7. There's just a lot of supply above us, but some of this supply might pull out of the way. Okay, so there's the tick up that we wanted. Be careful because they can make it look like it's going and then immediately pull it back. If I You can already see some people hitting back into the 6. There's kind of interesting thing going on here in the 30. Oh, okay. I'm tempted to just take 1 tick, but the setup should be more than that. Like, I want to see this volume and balance come completely back in the 5-year. That's what I want. But it's kind of hard to see it tick up there and then not, you know, have the problem of going higher in the same spot that it had before, you know? Okay, see, so that's not what we want. Definitely not what we want. Okay. Well, that's a little bit more encouraging. Let's see what is ES doing. Let's see, it's buying. I see. It's just kind of like you got from here to here. There's a big order right there at the top of the value area. Ugh. We'll see it showing 4 there now. Says that we should have kept it, but they're still having trouble at 6. If they're having trouble at 6, they're definitely gonna have trouble at 6.5.
Oh, I think part of the predicament we're in is nobody wants to go home short. I mean, long bonds into the weekend. But we already sold off so much. And I could be wrong. It could sit here and just trend up all day from here, but like we don't have a whole lot of room on the downside, I don't think. And then or at the very least much fuel to send us down. But nobody's going to sit here and buy it either, especially with ES. It seems to be having just a decently strong day so far.
I don't know. There it is again. Seller's gonna fight it on the way up. Yeah. This looks to me like something that could hold, Granted, this order right here could totally pull 100%. But you getting the support in all of them, and they're not even trying to sell into it, really. But you know what? They don't want to take this. Oh, the E-mini is moving down. They seem to be buying off of that. Yeah, it might take something happening in the E-mini to get us to move. Okay. 4,000 absorbed, they traded through it, but it stacked back up. Getting iceberging across the board.
We have 10 minutes now to top it. We have more data coming up in a rather packed session later. Now we look at University of Michigan sentiment prelim here for September. In at 96.6. Quick look at range for the headline number. And they put the range at 95.5 to 95. Conditions last one. 1 year pre-inflation. Previously was 5-year last one. Business inventory is also due up for the month. Well, looking at a 0.6% rise from range there, 0.2 to inventory checks all revised.
Okay, so there was iceberging on the bids there, and all three of them went through it. Well, 5-year ticked up. The other two not.
10-year yield is at 10% though. I mean, 3%. This is right at 3%. So.
Is it really? I guess that explains why so many icebergs here. The 5-year is ticking up there on the edge, but the 10-year doesn't seem to care. I'm not sure that the selling in the E-mini is done yet. Okay, well that's not positive development. This is pulling. Good grief, boys. That could go lower.
Minutes now before data hits. Just to recap, you've got University of Michigan.
Yeah, there's a level break setup right there.
Expected at 96.6, 96 point. The range there 95. Quick look at what analysts say. That headline index should rise to about macroeconomic, propelled by a rebound in the current conditions. As for business, advanced data suggests inventory rose by 0.6.
I mean, they are iceberging at 18, but I really don't think that's going to hold.
Bit of focus down the 3% yield. Well over a minute to go before the hour.
Plus those few ticks up was the breather. Yeah, it looks like Uzi's read is kind of playing out, isn't it? The thing is that when we got the buying, man, it just did not go anywhere at all, did it? You get this snacking and pulling is all over the place, right? But these bids did not, were not there for the buyers at all. You can even see it here on this one. There's a little bit of pulling. They don't seem to be acting like they think that the mass is going to be like super huge though.
In 100.8, 100.8, we get conditions there at 116.1, expectations 91.1, business inventories up 0.6% in line with 4.1 for inventory. Recap then, July, September sentiment 100.8.
Consumer sentiment is even higher than last time.
6.2. The current
We've
conditions.
seen.
Again, looking at inflation gauges, 2.8 there for the 1 year. Slips. 5 year.
E-mini doesn't like what's going on here. I'm getting some drama. I don't know. So the thing there was that it was a very convincing push lower, but the 30-year was not down here. So I still think the 30-year is going to want to try and touch 16. Well, as soon as I take it and it gives me the run and then it's up. Isn't that funny? Well, now this is at the 202 again, so I think we can buy that.
And the bund is just ripping.
Nope, that's a bad spot for buy. I don't know, sellers are still kind of fighting us, aren't they?
Seems that way. I think this is just a response of ES. Possibly run.
It's there, Joe Barnier. Useful dialogue with Dominic Raab this progress made this Brexit negotiations. But substantive remain on the protocol island governance, and we are also continuing our discussion to find compound relationship. I think that's what. There from useful dialogue with Dominic. Progress I made this week. Brexit. But different.
Mm-hmm.
Cable last at 130.90.
Oh yeah, that last sweep in ES looks bad. They were probably going to go for the lows here.
Right, the wire's picking up on by Barnier now.
We need the 5-year to break 207. Okay.
Senior Treasury yield. I suspend the August 1st.
You almost coughed up a lung there. Well, you feel like there's something on my neck. Okay. Eat. Come on. It looks like they're gonna pull back a little bit.
No big reaction. About substantive difference on island. Says that usual dialogue with has had usual Brexit minister.
Oh my gosh, I got so much gunk in the back of my throat. It's gonna make me hurl. You take up Mucinex. So.
Hello.
Hey.
Not much.
You know, I'm really not sure.
Right. Good ball.
That was a really good move up there, but I'm not really seeing the liquidity stack up behind it, or at least not anything significant, you know?
That's surprising.
That's what I was saying though, because it's Friday. The sentiment over the past couple of weeks has been that nobody wants to buy on Friday. So even with this,
Yeah, no one wants to go long into the weekend.
right?
Do y'all only trade bonds?
That's all I personally trade. Yeah.
You too, Seth?
Yeah, I only trade bonds.
Why is that for y'all? Is it, I mean, just like personal preference, or?
For me, it's mostly that, you know, because I would like to trade the E-mini, and I've had some good trade,
Right.
like sim trades in the E-mini, but it's just too much risk for my account size.
Okay. A lot more margin requirement.
The margin per contract is the same, but the E-mini just moves so much more.
You said it moves so much more?
Yeah.
Okay. So it's a little more risky, a little less predictable, I guess.
Yeah. I mean, if you look here in Treasuries, like, we've moved, like, what? A range of 10 ticks or so for the whole session? I'm not going to count it, but then when you look at the E-mini, they've gone, you know, 8 times 4, 32 ticks.
Right, yeah. It's been up and down this morning. What's the ticker for notes or for bonds? And the ZB?
Yep.
DB. be for the 30 years, the yen for the 10. I mean, it depends on, I guess, your platform though, or your data feed.
Right. Yeah.
Fed 70. Yeah. Feds would not be surprised if Fed raises total of 4 times this year. That says it's entirely natural to think neutral rates may rise above long-run estimate. That says he was no strong opinion. Gradual interest rate increases are appropriate. Pace allows Fed to consider uncertainties. Feds would not be surprised if Fed raises total 4 times this year. Entirely natural rates may rise above long-run estimates.
Seth, man, I think you have the I wouldn't say the perfect pets for trading, but you really got pets that really fit a trader lifestyle.
Oh, a bird.
Yeah.
Yeah. So were you watching that introduction video that I made?
Oh yeah, man. Appreciate the link. It was pretty good.
Man, I mean it's really annoying when I watch the video now, but like they would just not shut up, and I was like, I think it's better to have them on me and being stupid than to hear constant screaming in the other room.
Right. It's probably a lot like harder for you to hear with your headphones on, so it doesn't sound as bad while you're recording, you know?
Yeah. Yeah, the problem is I got these French doors here, and so like I actually have extra insulation on the wall between me and the next room, and that works really well, but then all the sound just comes through the French doors.
Right.
No, you sound fine.
So are bonds the only thing y'all trade? Like y'all don't trade like any stocks or options or any other?
Not day trade them at least.
So like, do you hold like long positions? I'm guessing like long stock positions or.
Yeah, so go ahead, Awano. I see you can talk.
Oh yeah, yeah. I mean, I have some stocks that I've like. They're more of investments. They're not, I'm not trading them.
Right.
I invest in a lot of pipelines out of Houston just because I know the industry a little bit.
Okay.
So, yeah, they pay really good dividends.
Pretty safe.
Yeah, exactly.
Kind of participate in the market, but not participate really.
Right.
I do the Bitcoin thing on a longer term basis, but it's a sell right now still, and I can't short it, so I'm just out.
Do you make anything from the Bitcoin craze?
So having not put any of my own money in there, I did okay. It wasn't like doubled my money or anything. I think that overall it was only like 40%, but I have 800 sitting in there. I'm just waiting for these buyers at 6,000 to finally give up and push us down to where we need to be, and then maybe I'll buy it.
You think they'll actually give up?
Yeah, they're not going to have a choice. There's just there's too many people still long. So mathematically speaking, unless something happens in Bitcoin that just brings a ton of new players into the market all at once, it's almost certain that they're going to push lower.
Oh wow! I thought there was enough longs that really kind of like held it up, just because 6,000 has been support for so long.
Yeah, well, the reason that they're holding it at 6,000 is because that's where mining profitability sits.
Oh, that makes sense.
Yeah, but the problem with that hypothesis is that we've gone below mining profitability before, right? It can happen. That's why it's just like the interesting thing about Bitcoin. Like when I'm looking at treasuries, I can see the orders that go through, but I can't see if that buy is somebody opening a position or closing a position. In Bitcoin, you can actually look at everybody's wallets, so you know exactly how people are positioned.
Oh wow, I didn't know that.
Obviously, I mean, there's the stuff on the exchange, so the trades that are on the exchange, but that's why you just do it on a long-term basis, and that's why I say there's still too many people that have money and they're probably going to get washed out.
So you think the longs are really in for like some turmoil here?
Yeah, and it could be pretty dramatic if it goes.
If it really breaks that support.
Yeah.
It's crazy. I was watching, I can't remember, one of the news channels, and they were talking about how college students have like I don't know, it was something like 16% of college students are invested into cryptos, which is like really high investment number for college students.
Yeah, I saw that story too. And that was exactly my thought, and I was like, it's still after as much as it's come back, there's that many people that have stuff in it.
Right, and yeah, I think it's more people that have like heard like the Bitcoin was invented during during our, I guess I recently graduated, so like Bitcoin was kind of invented like in our like growing up period. So like when it finally blew up, it was like a you know it was a craze. So everybody wanted to get in, and I guess people just, it's like an investment they hold like any other investment, but they don't understand it enough to know.
Right. You get that the what do we call it, the bull trap is kind of what they're stuck in now. Is how you got all the people that kind of missed the big move saying, oh, well, I can get the next move, so it came down, and so they're all buying it here. And
Exactly. It's like it's almost like you know how when people start 401ks or whatever, they invest in an index fund. This is the new index fund for millennials.
yeah, I don't know if I'm gonna take another trade. I was looking for a higher low there, but it just didn't. I mean, it ticked up, and it didn't really do what I wanted to see down there at 05. So and it's like almost time for me to go too. Yeah, so something I think might happen here that could be really interesting is millennials are chronically underinvested in the stock market. So
Yeah, oh yeah.
and I don't believe, even though we've seen some pretty crazy up moves in the stock market, I still have yet to see like the mania in the general public. So
Oh no, you're still part of the bull run, huh?
yeah, so I think what might happen is, as long as there's nothing gets too crazy with the trade war stuff, and we could absorb a lot more, but assuming that the trade war stuff doesn't get too crazy, I think that you could continue to see stocks move up, and at some point millennials are going to start getting into it and buying really speculative companies, and it's like as soon as all of the millennials go in and start buying it, it's gonna dump on them.
Yeah, I see. I'm a little less bullish than you are, because I agree with you that millennials are pretty underinvested. But I also don't really see millennials entering the market anytime soon, just because, the average of people that really, they wait a long time to really get invested in the market, to really start worrying about their investments. So, like, I think that honestly, they won't get in even in this bull run, this at least this cycle. And It,
the banks.
um,
Citigroup
I guess I guess I don't really see them because like just as far as like how long millennials are taking to purchase houses, I think the same thing will happen as far as investments really.
Yeah, well, they haven't been doing any of the things that normal people do because they haven't had the money yet. But
Right.
like wages are going up now, so that's why I think you might see it.
Slowly.
You know, as long as the trade war stuff doesn't totally screw everyone over.
Well, see, like I watch Tasty Trade, and they were talking about like how like one of the hosts or whatever was at like a game with her kid or whatever, and people know that she's a trader, and a lot of retail investors, you know, kids, parents that play on the team, come up to her and just talk about trading and like how they bought Amazon on the dip when it was like a dip to like 1900 or something, and then like that's not really a dip, but yeah, retail investors were really talking like we're really talking about entering the market, kind of like the craze that you're talking about with millennials, but just not millennials. They're more middle-aged people, I would say.
Yeah. But I just noticed in here because we've been running this now for I want to say 18 months, and there was a time period last year in particular. Like, oh man, when was it? I want to look back here.
The bull, you mean the bull run like around November?
No, it wasn't the bull run. It was
But did it go down?
I want to say that it was like summer of 2018.
Okay, yeah.
And I remember that the headlines were that all of the banks were actually losing money on their trading. So,
Really?
yeah. So, like around that time, the trading was pretty crappy, and most people in the channel weren't getting anywhere. It was just kind of like breaking even every day.
Right.
And I really didn't see very many new people at all. And now in the past, 3 months since we've actually started getting more inflation data, so it's starting to get to the point where I'll probably see a new name every day.
Oh, you think the channel is growing?
Yeah, so I think that you're starting to get into the time period where more people are starting to trade.
Right. The bull run has really brought a lot of those late investors that really kind of peaked the cyclicality nature of the market. That kind of really inflates the bubble.
Right. So I think that the group that you're seeing right now are kind of like the early adopters that kind of catch that last big run. And when we start seeing like dozens of people come in a day, then you know that it's time to sell.
Yeah. I'm ready for the volatility though. I've been participating in the market for too long, so should be something fun to look at. Because I didn't really start paying attention to the market until September of last year, and I didn't really see the summer volatility with the banks. Really, the only volatility I've seen is the January February volatility, the 20% correction.
Right. I'm still trying to learn what the cycle is, because when we have volatility I do really really well, and when we're range bound I do really really poorly. And there's definitely the summer, but now this past week we've had good moves. It's been good.
Yeah. Oh yeah. See, like I can't. I don't really know the cyclicality as much as for like bonds and futures and other like commodity products. But you know, as far as cyclicality goes, and like the equity markets, you know, usually the cyclicality is around like 10 years for bull runs, and we're coming up on that 10-year mark. So that's that's why I'm hoping, and I know other news networks have been talking about just the end of the bull run, blah 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 blah. I also think that how high the market is, how expensive it is really kind of scaring away some retail investors from jumping into.
It might be. Hey Zerv, how many did you take today? Like trades, like just post your screen. I'm interested. I was just thinking about that. I was like, well, he almost got though for 5. Oh, okay, I got you.
Got salty. My order didn't get filled. I'm trying to like use that order to help. Probably not a trade I should ever try.
Yeah. So have you seen me do the alligator with that? Like, if I get an order like that, I'll put like a stop limit 1 tick above it.
Yeah, I mean, like ES, like I'm watching ES mostly. It's kind of gone back into its upper end of its range. For that.
Oh, I gotcha.
Fair enough, too. That's probably a bad trade.
How far away do y'all usually set y'all stop losses?
I set it at 2 to 3.
2 to 3 ticks away from your order entry?
Mm-hmm.
What about like limit orders, like exit the trade to like on the upside? About the same.
So for I have it automatically put 1 at +4, just in case. Anytime that I get +3, I'm usually thinking about taking it off. Or if I see really serious absorption. But I try to just play it more as my entries or exits and vice versa. So.
Right.
Yeah, I mean, I have a mindset. I trade 2 contracts.
What are the margin requirements?
I often just scratch out of.
Okay. How much margin does one contract usually take up?
It's 500, yeah.
Oh, okay.
I mean in intraday or whatever. If you hold it overnight, it's like 2,500, I think. That's kind of why I was like, I'm really surprised that they let people trade the E-mini with 500.
Yeah, yeah.
And it's pension funds and corporate. Apparently, this is the last day today. Operations pension at large tax rate, and starting October 1st, the Fed increases the balance sheet.
What are y'all's trading hours? Like, what time are you usually active in here? Because I know it kind of like tails off towards the end of the day.
We're seeing around data release.
Oh yeah. You only see people in. Oh, sorry. Go ahead.
Treasuries at least.
No, I'm saying I don't know the time difference. I live in Japan.
Oh, okay.
Yeah, so like if I tell you, yeah, 9 p.m. and 9 a.m. I trade
So it's like late night for you right now, yeah?
yeah, it's 8:30.
Oof.
I wake up at 8:38.
Okay.
And
Are you
Half hours. Like there's a lunch break.
oh
And
wow.
afterwards.
Are you in the military or something?
Nope. I'm a pro.
Is that way that did a job lead you to Japan or something?
No, I just took myself here. Started off as an
Okay.
English teacher, and I'm a programmer.
Nice. Do y'all trade full time?
yeah, I only trade the first 2 hours of the session, so this is about when I'm gonna step out.
Oh, okay.
Another
Right. Yeah. I
But he's always talking. He's always friendly. Hope not.
Gotcha. Do y'all have like other jobs that y'all go to or?
Unemployed.
No, I'm a programmer, so
Okay, that's cool.
I've found one of the things that seems to be a misconception is people think, oh yeah, like the goal is to trade full time and everything like that, but the number of like if you say like 10% of people are successful, maybe like 1% of those actually ever get to full time, you know?
Oh yeah, definitely. Yeah, I recently started trading full time, and I wanted to uh kind of learn scalping futures just because I know it's a better more intraday market mover
So you
than
got I believe
stocks
that,
or options.
governments in India and Austria. They're both committed to
Well, yeah, I think I don't know. Forex is just like a whole another kind of ball game, and it's I feel like the research that I've already done from stocks and options carry over a little more easily than going to Forex.
I think Forex is all.
both
be honest.
Oh yeah.
Government.
I haven't even done enough research to even form an opinion.
I mean, it's not a scam, but just there's so much like missing trading against your.
Right.
Like
You
it just
don't
doesn't
know.
seem to be good. It's not like a win-win. Trading
Right.
futures, your broker collects. You don't really want.
Right.
They want to get in those.
You know how your broker is making money pretty much when it comes to Forex, it's a little more speculative.
What else will happen to Lucas here?
Yeah, I was looking through some of like the education and stuff the other day, and I was happy to see a Tasty Trade video up there. I've been watching Tasty Trade for a couple months now, and I love their program.
Yeah, today has been a hard day, guys. I wanted to buy that at 05, but look, it didn't. Yeah, it just didn't give me the right thing, did it? So, and now here, kind of says at 07. Like, okay, so there's the big bid. Watch it not actually go. You see that? The big bid at 07 when they took. Watch it not actually go.
So a future tick, like talking about the like I'm looking at the ZB, and like a tick is like the 2-4 and then 2-5 if it goes up a tick, right?
Like the prices?
Yeah.
Yeah.
So the Z up in broken into 30-second, 32 parts for.
What do you mean exactly? Like, what do you mean? Like, I guess okay, never mind. Like, they said a second number, like after the apostrophe. That's what you mean.
Yeah,
There's
that's how many like 30-second. You're 30 yeah 32 1 out of 32.
okay.
And the again is it's I mean they're all broken up into 32 parts as like increments, so it's like 30. Those 30 seconds. That makes sense.
All right.
So sure enough, they went and they took a tick up and then they come back down.
Come back down. I close. I don't want to look at it. I had a bad day today.
Damn, sorry, man. I lost 2.
I actually had a pretty decent day indicated. Ever.
Yeah, I felt like I traded today correctly because I wasn't well. Actually, I take that back because I did sell at 5. That was not the right thing to do. But I was really surprised, by the way, when we came down there and we saw that iceberg, the one that you tried to buy. I was like, well, we're just plowing through icebergs. That one, they're probably just going to keep going, and they have this huge order down at 02. Maybe it goes, and then nope. Nope.
Yeah, so the reason I wanted to buy that was because I saw there was the other side. They were selling into it and started buying the other side. Yes, finally broke it.
Yeah, this is a good point.
Like I was saying before, it finally broke. It broke down out of its. That kind of coincided with like I can probably get try and grab like. Yeah, I didn't get the fill. I was like 214 in the. I tried to alligator.
Now, next time you do the alligator, do it like the advantage. Well, the advantage of the alligator is you're not in the market very long, right?
Yeah, I mean, I guess it's a really good risk. Put a stop limit. Maybe I'll just get potentially gain.
Yeah. So.
Those minus 2. Like, which isn't. I mean, it's totally.
But so the way that I do it is if I get an unfilled order that's really has a really good queue position and it runs away from me, but I think that there's still a high probability of it coming back and filling me. You know, so if you had the buy at 045, then I would just use Jigsaw to put in a stop limit at 05 and set it to be like a really low, like under 1500. So that way I only take the trade as they're selling 05, and then it doesn't take very much to sell into 045, and if you do it right, you're only in it for a few seconds. And it's just a tick.
Yeah, I mean, it's a nice trade. I need to like go through that in general.
Well, I don't know if a nice trade is the right word. I don't know if nice trade is the right word because it's very tedious, right?
Yeah, but it seems like it seems like a low risk setup.
Yeah, it is.
Like I said,
Yeah.
If you put a decent top volume stuff, what's the worst thing gonna happen?
Yeah.
That's a decent.
Yeah, as long as like something crazy pushing the market all over the place, like Donald Trump just tweeted or something, as long as that's not happening, it's extremely low risk.
They're just taking like the order. That whole trade is like -2. 2 contract, which
Yeah, that's a good point because I'm looking at my. Well, here I'll post it.
trading, yeah. Yeah, so like -2 on trade. You're not crying about like one.
Yeah, it was that one trade though that was the -2 was like a really bad. That was dumb one. I'm not quite sure why I took that one because I kept saying like, okay, 2 takes risk, and when I look back on the chart and I see that I sold 5, like how does that match my risk requirements? It doesn't. Okay. Oh yeah, that last one is no good.
It's just bad trading all. That's my own.
What about when you took the first one, the 06 buy?
That was also. But it wasn't as bad as the last. I took 3 on one. Scratch half of it.
So the way that I try to look at it, and granted I didn't do great today either, right? But my theory is that you're more likely to get trending action when people are opening positions. You're more likely to get range bound action when people are closing positions. So if it's a Friday, you know, granted we did have a move lower that seemed awfully crazy when it happened, but that was maybe a little bit of an illusion to us because in reality it was only 4 ticks down, right? But it really because it was a Friday and because of the context, it really wasn't going to run. So for both of us, we took trades like on the edge as it looked like it was breaking, and you're not going to get that trade. It's not going to work as well, at least on Fridays. That's why when I look at my stats during the time that I was just always taking it as she goes, Mondays and Fridays are like the worst days. Mondays because there's often just no reason for them to take a trade. And so just nothing happens on Monday.
Yeah, I'm kind of considering like if I really want to bring one, they're trying to trade both.
Well,
where I do one and really terrible.
Well, it's kind of a conundrum, I think, because if you're looking for consistency, then just picking one instrument and focusing on that and getting really good setups in that, I think is probably your best bet. And the reason why I think that is because of the cyclical nature of markets. It's a lot easier to understand what the current cycle nature context of things are if you just understand that one instrument really, really well, you know? But the impatience is a sort of thing that you kind of like everybody has to overcome, though that's not. But the split side of it is that when you're trading multiple instruments, you can find, you know, better opportunities. So you know, just as an example, when it was the QE era, the trade was you would see one of the commodities would have like a little jump in the morning, and then it would just trend up all day long. And you just had to wait to find out which one it was going to be, and then everybody would jump on board, right? So, but you would have to watch like all of the instruments to see which one it was going to be. But then you could get like a really good trend trade almost every day. But then, you know, that trade disappeared. And then you get into a situation where, yeah, if you don't understand the context of the individual instrument, and you're going to take that setup, and you're not going to realize that that's a really bad place to take that setup in that particular instrument.
Alright, I'm gonna head out for the night.
Yeah, me too. Good talking. Nice meeting you. Ridiculous. So talk to you next week, I guess.
Hi, man. You too.
Okay, well, it looks like everybody's gone. So I hope you guys have a good weekend. No, I don't think I'll be around. But what do we got? Let's just look really quick. What do we got next week? Next week. Let's just filter out everything except for the USD. Okay. So this is where things kind of start to slow down, right? So we'll be careful. Existing home sales though, and PMI. So some good trading, but not like super great. And then after that, I think we could be careful. So, okie dokie. Well, you guys have a good weekend, and we'll see you on